Hello everyone, welcome back. This is Jeff Craig from Mysteel's iron ore department, here to give you an update on China's ferrous market. Let's dive in. China's ferrous market experienced an initial uptick, followed by a correction in the opposite direction over the past week. While steel fundamentals remained resilient due to slight improvements in downstream demand during the ongoing off-peak season, concerns about sustainability persisted, as China's steel exports witnessed an on-month decline in November. Market expectations initially remained optimistic before the conclusion of the Political Bureau meeting and the Central Economic Work Conference. But sentiment has now softened, as no breakthrough measures were announced, despite the signaling of positive intentions for upcoming policies in 2025. On the steel side, steel inventories declined for the 10th consecutive week as supply continued to decrease, driven by narrowing profitability among steelmakers. Total apparent consumption saw an unexpected increase, with construction steel accounting for much of this growth. This rise was linked to project completions in East China and China's southern regions. In particular, municipal projects with stronger financial backing as they rushed to finish before year-end. HRC fundamentals face oversupply pressures, with inventories rising after 3 consecutive weeks of decline. Increased production, combined with softening domestic and export demand, led to a narrowing of the HRC-Rebar spread, reflecting weaker HRC fundamental performance. Both integrated and mini mills reduced production further, as profitability continued to shrink, adding pressure on raw materials such as coking coal and coke. The 4th round of coke price cuts was fully implemented this past week, significantly squeezing coking plant margins to near break-even levels. This is likely to limit production activity at coke plants. As a result, pressure on coke fundamentals is expected to ease slightly, offering short-term price support. On the iron ore front, iron ore prices outperformed this past week, even as portside inventories edged higher, with gains attributed to relatively positive market sentiment and a sharp drop in global iron ore shipments caused by maintenance at mines and ports. In addition, iron ore discharge volumes at ports remained elevated due to increased transshipment activity. Looking forward, the off-peak season is expected to place further downward pressure on fundamentals, playing a key role in determining the market's direction. Shrinking profitability for steel mills is likely to accelerate hot metal production cuts, which will weigh on raw material demand generally as a result. Despite ongoing winter stockpiling, with major domestic economic meetings now concluded, macroeconomic narratives are expected to have less influence on the market until the 2 sessions next year. In the absence of clear and major policies, market sentiment may cool further, reducing support for the ferrous market in the weeks ahead. That's all for this week's China's ferrous market update. Thanks for tuning in.